Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date is Monday, November 30th, 2020. Let's start out first with the S&P 500, folks. Let's do some hardcore analysis on the technical side of the charts. Basically, what you have is a market that continues to bubble up against major resistance. So when you see the first Monday back after a holiday weekend and it is a market down day, don't be surprised. The reason I say that is very crystal clear. You can see that this trend line goes all the way back to 2018, and that is what we are hitting up against. So it's a lot of resistance. The market has hit this level multiple times over that period. Every time we hit it, we pull back. So again, there's no reason to think that this is any different in terms of this situation. So ultimately, you should expect weakness in the market. December, most people have penciled in as a Santa Claus rally month. I am not sold on that. The reason I say that is because the big money out there, the ones that have millions and millions and millions of dollars, hundreds of millions of dollars invested, they have to make a very powerful choice before year end. And that is whether or not to sell their big winners that they've held for multiple years in terms of long-term cap gains and lock in that long-term capital gains rate at this point in time. The reason they have to decide is because come early January, there'll be an election in Georgia that will decide if the Democrats take control of the Senate. If they do, the long-term cap gains on the top earners out there, those making over $400,000, will be ultimately doubled according to the Biden administration. Now, while you might think that's a really bad thing for the market, I don't think it is. The reason I say that is because it might cause weakness in December here, but if that did happen in January, then you will see massive stimulus. If the Democrats take control of the Senate, then forget about it. You're going to talk 2, 4, 6 trillion in stimulus over the next year and a half, and that would be a very positive thing for the stock market. So yes, corporate taxes would potentially go up. Yes, long-term cap gains would go up for the highest earners, but the stimulus would offset that in 2021 potentially. Is it a sustainable thing of printing of money? No. Obviously, there's going to be a collapse in the future, and investors should be fully ready for that and protect themselves. How do you protect yourself? Gold and Bitcoin, folks. Gold and Bitcoin. All right, I wouldn't chase Bitcoin up here. I've been talking about it since it was below 10,000 this year. That was when to buy it. Now it's too late. It's basically at 20,000. Gold is pulling back short term. I do like gold, though. Let's take a look at the gold chart. There was a key support here, but this is the big one right here. Look at all this support on the GLD. Basically 165, which we're just $2 away from here. One good drop in the next few days. We get there. That is a huge buy level. In fact, I want to show this chart to you guys right now. Check out this amazing chart of gold, folks. This is going back to the late 70s. You can see right here, it was basically put in a high pivot of 876. 30 years later, it finally broke up, and then it had a retrace. You can see it right here. It pierced the high right here, this high, pierced, and then look at this retrace. History is repeating as we speak here. If you see, here was your high pivot from 1910. We pierced it here. We went above 2,000. Now we're retracing. We're actually not far away from the 382 retrace. Look at this. A perfect 382 Fibonacci retrace in 2008 off of that pierce of that high before it had the big run up. Guess what we're doing right now? We're getting very close to that exact Fibonacci retrace in this year of 2020. That is going to be your spot right there. If you're looking to load the boat on gold, look for right around 1750, which again would be a 382 retrace from the move up. And again, that is your spot. Right now, gold is trading down on the day. And check this out. We're at 1783. We hit a high in the overnight of 1767. So think about how close we are to this level, this Fibonacci retrace. And look at how history repeats. It pierced, then a Fibonacci retrace. Here was your previous high there, pierced, now a retrace. Ultimately, what does it mean? It means you're going to get a move like this up in gold with a target of approximately just under $3,000 per ounce, probably over the next 2 to 3 years, actually. By 2023, I think gold again gets very, very close to that $3,000 an ounce level. Very cool stuff there. All right, just a reminder before I go into my next chart here that you can follow me on Twitter at Gareth Soloway. You can also come to InTheMoneyStocks.com, look for my name at the top of the website, and Look for Verified Investing Alerts as a drop down under my name. Verified Investing Alerts is one service for swing trading stocks. It also comes with daily videos and live broadcasts where you can ask me questions. You can also look for Verified Option Alerts, which is just options trading there for those of you that love the options market. All right, one thing to just point out, and I love saying this because I'm proud of it. This year, folks, we have now traded, I have closed out 191 total trades. 191 total trades in Verified Investing. Those are swing trades, folks. And again, that's almost, I mean, really, that's not much less than one a day. About, probably one every 2 days as an average. And this is the kicker. The net gain, when you take the losers and the winners, 1,732%. 1,732% net gain on those trades. Remarkable. Okay, let's look at Home Depot. I was isolating Home Depot. There's a head and shoulders here that's worth noting here. Look at this. Shoulder, head, shoulder. This is your neckline right here, and it's crystal clear. Look at this. Neckline. Pivot, pivot, pivot. When this breaks, you are going to have a big fall on Home Depot. Your downside target short term is basically 247 to 246. That is your target short term. And again, I do expect this break to take place, but once it breaks, that's when it triggers. That's when you'd look to be on the short side and ride it all the way down to about 246, 247 on the chart. All right, that is one I want to point out here. There's a couple others that I want to take note of. I do think the semiconductor chart is ridiculously overbought here. This has been one of the most amazing moves that continues up, up, and away. At some point, and this is my thesis, is that when the reopening does take place, and even going into it, you're going to see a lot less people buying computers, right? All the computer demand was pushed forward during COVID because people were like, all right, I got to work from home. My kids are home. Get them a computer. All these type of things. So you're going to have this lull in computer sales, which means graphic cards, which means semiconductors galore. All these type of things are going to take place, and that is going to mean that over the next year, the semis are actually going to underperform. So I expect the semis to underperform. Just in the short term, I expect a correction on the SMH back to about 170, but ultimately it could get as low as about 154 right here on the downside just over the next 3 to 6 months, maybe 6 to 9 months in that vicinity. But again, if you think about it logically, the great earnings from these semiconductors have been pulled forward because of the demand for devices during COVID. People are home. They don't know what to do, so they're buying computers and tablets and phones and this and that. Once they're out and about, listen, if you're going on vacation to a beautiful resort somewhere, you're not about to be like, well, let me stay inside the whole time and, play on my computer. You're going there to have fun, to drink, to be in the sun, to be on the beach, to be in the pools, and hang out with your fellow, humans. So that is the thesis there. That means that at some point you are going to see a major top in the semis and a big correction will take place. So look at that as a potential short trade. All right, bottom line is, folks, come find me at inthemoneystocks.com. Look for my name at the top of the website, Gareth Soloway. Drop down underneath with my 2 services. Get involved. We had another winner today. We had a 13.74% gain on XPEV on the short side. We also had an options profit of over 30% on XPEV puts, and that was an easy call on that trade as it had gone insane, and I had a measured move calculation max move on XPEV. And look at this pullback just over the last few days since we entered. A beautiful gain on this. All right, come join me at inthemoneystocks.com, folks, or follow me on Twitter.